Okay, let's unpack this, because if you blinked on May 14th, 2025, you might have missed a biotech stock absolutely skyrocket.
Right.
We're talking about Septerna, ticker SEPN, saw its share price jump, what, somewhere between 45 and 60%?
In a single day, yeah. Pretty dramatic.
So what pivotal event sparked this climb? What's the real story behind that surge? That's exactly what we're diving deep into today.
That's right. Today's analysis takes a close look at Septerna, a clinical stage biotech firm. We've gathered a range of sources leading up to that date, May 14th.
News, SEC filings.
Investment analyses, yeah. All to understand the significance of their newly announced collaboration.
And our mission here, for you listening, is really to cut through the noise, get to the core of Septerna, what their business is, who's leading the team, their financial health.
How the market's reacting now.
Exactly. Ownership, and crucially, the risks they face. We want to give you a clear, insightful picture, especially with this major development.
And stick around, because we've got a question at the end.
Yeah, a thought-provoker about these kinds of biotech partnerships in general.
So let's start at the beginning. What exactly does Septerna do?
Okay, so Septerna, founded 2019, originally called GPCR Co., went public October 2024.
Based in South San Francisco.
Right, and they're focused on creating oral small molecule drugs. So pills, basically.
And their targets.
Their targets are these things called GPCRs. Think of them like tiny receivers on our cells. They get signals, tell the cell what to do.
And they're involved in a ton of bodily functions.
Huge range, yeah. So Septerna is looking at areas like endocrinology, hormones, immunology, inflammation, metabolic diseases.
Which brings us to their core technology, the native complex platform. What's the key takeaway on this? Why is it special?
Okay, imagine trying to design a key for a really complicated lock, but the lock kind of shifts shape. Septerna's platform is like a super sophisticated way to take that lock, the GPCR, study its exact shape as it naturally exists, and then design a key, the drug, that fits perfectly, even those slightly different shapes.
So they isolate them, purify them.
And then put them back together in these native complexes. It mimics how they work in our cell membranes.
And why is that so important for drug discovery?
Well, GPCRs are the biggest family of these cell surface receptors. About a third of all FDA-approved drugs already target them.
Right, a known target class.
But here's the kicker. It's estimated maybe 75% of potential GPCR targets are still undrugged.
Still uncapped.
Exactly. Septerna's platform aims to unlock these previously hard-to-reach targets.
And lets them be really precise, right? What capabilities come from that?
Yeah, they can focus on specific GPCRs, find unique places for a drug to bind, not just the main on-off switch, but also exploring like dimmer switches, allosteric modulators.
Alongside the usual agonists and antagonists.
Right, and they use advanced tech like cryo-EM.
Which is like taking super detailed freeze-frame pictures of these molecules.
Exactly, to see the 3D structure. Then they use computers, lab tests to screen for drug candidates.
Okay, so with that platform as the base, what did their pipeline look like just before this big announcement?
All right, as of May 14th, they had a few things going. A PTH1R program for hypoparathyroidism that's about calcium levels. Preclinical.
Meaning lab and animal studies.
Yeah, aiming to pick their next-gen candidate end of 2025. They did have an earlier phase 1 drug, SCP-786.
Phase 1 being initial human safety tests.
Right. That one was stopped. Reversible bilirubin elevations, some liver stuff. But it did show early signs of working on target.
Okay. Well.
Then there's SC631, targeting something called MRGPRX2 for chronic hives and mast cell diseases. That was preclinical, phase 1, expected sometime in 2025.
Got it.
Also, a TSHR-NAM program, preclinical, for Graves' disease and thyroid eye disease, autoimmune stuff.
And the big one.
And then the incretin receptor program, targeting GLP-1, GIP, glucagon, think obesity, type 2 diabetes, cardiometabolic diseases, discovery, preclinical stage.
And this is the one partnered with Novo Nordisk.
Ningoduff announced May 14th. That's the event that sent the stock flying.
Absolutely. I mean, it's a massive vote of confidence in that native complex platform.
For sure. Novo Nordisk, they're giants in metabolic disease, right? Wegovy, Ozempic. For them to partner with a smaller biotech focused on oral small molecules in that same space, well, it signals the potential they see.
Huge validation. Okay, let's shift gears. Who's leading Septerna? The management team.
Right. At the top, you've got Dr. Jeffrey Feiner, president, CEO, director, and a co-founder.
A lot of hats.
Yeah. He brings over 35 years of experience, venture partner at Third Rock Ventures, involved in Maze, Ambees, held roles at Theravance, 5' cytokinetics.
Strong background. Stanford MD, PhD in biochemistry.
Exactly. And their CFO, Gil Abruteri, he joined January 2025.
Relatively new then.
Yeah, but over 25 years in biopharma, tech finance,
Yeah.
former CFO, CBO at Acelerin, executive at Nectar.
Okay, sounds like he knows his way around finance deals.
Definitely. Huge track record in raising capital over $1.5 billion and forging partnerships worth over $1 billion, plus a law degree from Berkeley.
So, serious experience there. What about the broader team and board?
Seems well-rounded. They've got key people covering ops, HR, science, drug discovery, clinical, and the board has diverse experience.
Which is good for governance.
Right. For specifics on the board and, how they operate, you'd look at their proxy statement, the DEEF-14A, filed April 29th, 2025.
And that would also detail executive compensation, aligning with shareholder value.
Should do, yeah. That's usually the goal stated there.
Okay. And insider ownership. Do the managers have skin in the game?
This is where it gets a bit fuzzy sometimes, depending on where you look. FinViz said almost 40%. Stock Titan said more like 7%. Big difference.
Yeah. Why the discrepancy usually? Timing? Different definitions?
Could be timing of filings, how they classify owners, yeah. That's why, again, that DEF-14A filing is your best bet for the accurate figures as of that date.
The official source.
Exactly. But generally, you like to see significant insider stakes. Suggests alignment,
Makes sense. Okay, let's talk money. Financial health before this Novo deal landed. What did the books look like?
Typical clinical stage biotech picture, really. Very little revenue, $151K in 2023, just over $1 million in 2024. Probably small collaborations.
Right, not product sales.
No, but R&D spending jumped significantly, $36 million up to $65 million.
Reflecting pipeline progress. And maybe that SF-786 shutdown cost.
Yeah, likely both. G&A, general administrative costs, also rose, about 9.7 mil to 16.6 mil.
Pretty standard post-IPO costs, yeah. Going public isn't cheap.
Exactly.
Yeah.
So they reported a net loss of nearly $72 million in 2024. Now, 2023 showed net income, but...
But there was a catch.
Yeah, that was due to a one-time asset sale. So the underlying trend was losses, which, is expected at the stage.
But they had cash, right, from the IPO?
Yeah. Strong cash position end of 2024, $420.8 million in cash and marketable securities.
That's a good cushion.
Definitely. Their cash burn from operations in 2024 was about $67.5 million. And structurally, low debt, around $25.5 million recently. Very healthy liquidity ratios, like current and quick ratios, were way up near 28.
Meaning lots of short-term assets compared to liabilities. Good shape there.
Very strong position to meet immediate obligations.
Okay, now drop the Novo bomb onto that picture. How does the collaboration change things financially?
It's a total game changer. Simple as that.
How much money are we talking?
Over $200 million upfront and near-term payments, potential for up to $2.2 billion total if milestones are hit down the road.
Billion with a B. Wow.
And, critically, Novo picks up the R&D tab for the partnered programs.
That's huge. Frees up Septerna's cash.
Massively extends their cash runway. We're talking potentially beyond 2030 now. And it seriously reduces the risk of needing to sell more stock.
Dilution risk, yeah. Big relief for shareholders.
For sure.
So with all this cash, path to profitability soon.
Still unlikely near term. I mean, it still hinges entirely on clinical success, getting drugs approved, maybe more partnerships for their other programs.
Right. Cash helps, but doesn't guarantee success.
Exactly. So those standard metrics like PE, PS, still not very meaningful for Septerna right now.
But that cash pile must give the market something to think about beyond just runway, right? Are there other factors influencing that path to profit?
Oh, absolutely. While the cash is key, the market's watching trial progress like a hawk. Any more validation of the platform through Novo's work or Septerna's own programs, that'll be huge. Positive data is currency here. Okay, moving into the second half of our deep dive. Market sentiment. How did the market react, price-wise?
Well, we mentioned the IPO at $18 back in October 24. It was a pretty rough ride after that. By May 13th, 2025, the day before the news, it closed at $6.73.
Ouch. Down over 60% from the IPO.
Yeah, significant drop. So the market was maybe primed for good news. And boy, did it get it.
That 45-60% surge on the 14th.
Exactly. Took it up to between $9.52 and $10.64. Put the market cap somewhere around $310 million to $473 million.
Still below the IPO price, but a huge recovery. What's the 52-week range look like?
Pretty wide. Low of $4.17, high of $28.99. Shows the volatility.
Okay, what were analysts saying before the deal, and how did sentiment shift?
Pre-deal, consensus looked like a buy. Average target was around $33.
High target.
Yeah, though the range was wide, like $11 up to $27 on some platforms. Post-deal, some data sources were slow to update, still showing old targets.
Happens all the time.
Right. BMO Capital commented positively, but more on Novo's strategy, seeing it as smart diversification for them.
Interesting angle. What about retail investors?
Places like StockTwits. Sentiment flipped dramatically, from generally negative to extremely bullish, almost overnight.
Not surprising. We should expect updated analyst reports soon, factoring this in.
Definitely. Watch for those revisions.
You mentioned the stock was down heavily before the news. Was there significant short interest, people betting against it?
That's a good point. Yes, there was notable short interest. Reports varied, but figures like 12% short float, high days to cover.
Meaning it would take shorts a long time to buy back shares if they had to.
Exactly. Suggest a decent number of investors were pessimistic, and that likely fueled the rally on the 14th.
A potential short squeeze, adding to the buying pressure.
Very possible, yeah. Shorts rushing to cover their positions would definitely push the price up faster.
Now, thinking about value, after that big jump, what did it suggest about Septerna's intrinsic value?
This is where it gets really interesting. Even after the surge, the market cap seemed to be below their pro forma cash.
Wait, below the cash they'd have after getting the Novo money?
Yeah. If you take the $420.8 million end of 2024 cash, add the $200+ million upfront near term from Novo, you're looking at roughly $620.8 million in cash. Compare that to a market cap, even after the jump, in this, say, $310 to $473 million range.
It implies the market was valuing the actual science, the platform, the rest of the pipeline at less than zero.
Kind of looks that way, doesn't it? Suggests a potential undervaluation.
From a margin of safety angle, that's quite something, having more cash than your market value.
It offers a potential cushion, for sure. But, in biotech, does that cash always equal safety? Could it vanish quickly?
Good question. Clinical setbacks are expensive. Regulatory hurdles cost money. Maybe they need to acquire something else.
Right, so while the cash is great, it's not an ironclad guarantee against future bumps. But it certainly helps.
Okay, let's look at who owns Septerna, the shareholders. Any big names?
Yeah, you see significant stakes from specialized biotech funds, RA Capital, Samsara Biocapital, BVF.
The specialists.
And venture capital, like Third Rock Ventures, who are co-founders. These are generally savvy investors in this space.
How much do institutions own overall?
Numbers vary slightly, but
Okay.
Fintel reported about 45.8 million shares held by 175 institutions. NASDAQ data showed around 44.5 million by 75 institutions, so significant institutional backing.
Any particularly large holders?
RA Capital looked like the biggest, around 15.8%. Third Rock, around 14%.
Have holdings been changing recently?
Some shifts. A Third Rock affiliate actually increased its position recently. Some big firms like Goldman Sachs, BlackRock trimmed there slightly.
Yeah.
We'll need Q2 filings to see the post-Novo deal landscape properly.
Definitely. And management's ownership stake.
Same story as before. Check that DEF 14A for the definitive numbers on management and 5% plus owners. Strong management ownership usually seen as a positive alignment signal.
All right, let's talk risk. Novo deal is great, cash is great, but it's still biotech. What are the key risks here?
Absolutely critical to remember. Clinical development risk is always number one.
High failure rates.
Exactly.
Yep.
And we saw that with SF786 being discontinued. Plus, the inherent challenge of drugging these undruggable GPCRs.
Okay, what else?
Regulatory risk. Getting drugs approved is long, costly, uncertain. Regulations can change.
Competition.
Fierce, especially now in oral obesity and diabetes. They're up against giants like Eli Lilly, other innovators like Structure Therapeutics. Risk that competitors are faster, better.
IP risk. Patents holding up.
Always a risk. Patents can be challenged, invalidated, or competitors might design around them, even with protection out to the 2040s.
Financial risk despite the cash.
Yes. History of losses.
Yeah.
They'll still burn cash on their own programs. Need to manage that burn carefully.
Reliance on others.
Big one. Relying on CMOs for manufacturing, CROs for trials. Issues there can cause delays. And now, heavy reliance on Novo Nordisk's commitment and execution for the partnered programs.
Platform risk. Success in one area doesn't guarantee it everywhere.
Good point. Success in metabolic targets might not translate perfectly to immunology or endocrinology.
And just general market risk, biotech volatility.
Always there. Biotech stocks can swing wildly on news or just general market sentiment.
You also looked at potential impacts from the 2025 U.S. tariffs. How might that affect Septerna?
Yeah, interesting angle. The direct impact. Probably low to moderate right now. They aren't selling products yet.
So more indirect effects.
Likely. Could see increased costs from their CMOs or CROs if
Uh,
they use tariffed imports. Could potentially impact Novo's supply chain, which might indirectly affect future royalties down the line.
hadn't thought of that.
And just broader negative sentiment, maybe. Tariffs can make investors nervous about sectors like biotech. Increased costs for specialized R&D components, too.
Any mitigation strategies?
Diversify suppliers, maybe, though options might be limited. Work with CMOs, CROs on handling costs. Prioritize U.S. suppliers if possible.
But the Novo cash provides a buffer.
A significant one, yeah. It's more a systemic industry risk, but Septerna's resilience is definitely boosted by the deal.
Okay, so pulling this all together, what's the bottom line on Septerna right now?
Well, in summary, that Novo Nordisk collaboration is truly transformative. Huge financial strength, massive validation for their platform.
And the potential undervaluation based on cash.
Creates a potentially interesting margin of safety argument. But, and it's a big but, you have to weigh the inherent risks of clinical stage biotech.
So overall,
Given the situation, a speculative buy seems like a reasonable assessment. High potential reward, but definitely not without risk.
and what should investors watch for next? Upcoming catalysts.
Yeah, several things. The official closing of the Novo deal itself, any updates from those partnered programs, starting that phase 1 trial for SEPI-631,
Uh-huh.
and selecting that next-gen PTH1R candidate by year-end, which they've guided towards.
Lots to keep an eye on. This has been a really insightful deep dive.
I'll have to break it down.
And as promised, here's that final thought, that question for you, the listener, to chew on. Given this substantial upfront investment by a giant like Novo Nordisk in Septerna's technology, what does this trend of big pharma partnering with innovative biotechs really signal about the future of drug discovery? Where might we see the next wave of these kinds of strategic alliances?
It's a fascinating question. It really points to how the whole R&D landscape might be shifting.
Absolutely. Well, thank you for joining us for this deep dive into Septerna.
My pleasure.
And if you found this analysis valuable, please do subscribe to the Stock Analytics AI YouTube channel. We do more deep dives like this regularly.
And just the necessary disclaimer before we go. Please remember, this analysis is based on information available up to May 14th, 2025. It's our interpretation of financial data and market dynamics.
It's for informational purposes only, definitely not financial advice.
Right. Any investment decision should always be made with guidance from a qualified financial advisor who knows your specific situation.
And just a note, we may have used AI tools to help aggregate and synthesize data from the sources we looked at.
All those sources are available for you in the description.